Matt Walsh and Nick Carter are partners at Castle Island Ventures. All views expressed by them or the guests on this podcast are solely their opinions and do not reflect the opinions of Castle Island Ventures. Guests and hosts may maintain positions in the assets discussed in this podcast. You should not treat any opinion expressed by anyone on this podcast as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of their personal opinion. This podcast is for informational purposes only.
Brought down by bad mortgage investments, Lehman, which has 25,000 employees, will be liquidated.
The federal government loans American International Group, AIG, $85 billion.
This is a different kind of market, and the Fed is asleep.
The federal government is stepping in to stabilize Fannie Mae and Freddie Mac, the two mortgage giants that have been threatened by the housing crisis.
The Bank of England has pumped £75 billion more into Britain's ailing economy with a new round of quantitative easing.
You print a couple $1 trillion, and all of a sudden, people start to worry. So out of this worry, we have something called the Bitcoin.
Welcome to On the Brink. I'm Matt Walsh.
And I'm Nick Carter.
I had a terrible travel 24 hours.
Yeah, you're looking a little frazzled, actually.
Yeah, I mean, I'm in the same clothes I was wearing over 24 hours ago, right? I came right to the office. So I went down to New York for a day trip. I had an 8 o'clock flight back, and I stayed at LaGuardia until about midnight, and then they canceled the flight. All the airport hotels were booked, so I ended up in a Roach Motel in Flushing, and I had a 6 a.m. flight, went to the airport, that was canceled. Then I had to take the train.
So you had to take the Uber at rush hour into downtown?
Yeah, well, it wasn't really right, it was before rush hour, but yeah, it still wasn't great. I also had just no clothes, so it's the life we lead. People say this is an easy job.
Was the TSA working, or are they all kind of like on strike or something?
No, TSA was good.
Oh, because I heard the TSA is like broken right now.
Oh, really? No, I got through fine. TSA was not my problem. It was the fact that they were saying there was bad weather in Boston, and it's not that bad.
Yeah, spare a thought for all the crypto folks. Just they can't fly. They're in Dubai, and now they get trapped.
Oh, I know. That's bad.
That's tough. That's a good portion of the crypto industry is there.
Yeah, I know. Yeah, hopefully everyone's staying safe. So I guess it could be worse.
Yeah,
could be a lot worse.
No Castle Island content this week.
No, we'll be back next week with a few pods, but some interesting deals this week.
Yeah. Big chunky one to lead us off. Cast, which is the stablecoin based card payments platform. There was $60 million from QED Left Lane. Peak 15 partners and others. Huge round there.
That's a big round. Then we have Zodal, which is the Zcash Open Development Lab. This is a company that is building at the protocol level in Zcash, and I believe also have a wallet. They raised $25 million. Sorry about that. From Paradigm, Andreessen Crypto, Coinbase Ventures, and a number of others. This is kind of the spin-off team, right?
Yeah, I haven't been following Zcash politics that closely. I guess there seems to be a lot of internal conflict in the Zcash ecosystem.
It was the guy from Cosmos was in Zcash for a while, and then there was a split. It seems like this is where the momentum is with this Zodal entity.
Then we have Very AI. This is a platform to verify human ownership of AI agents. There is $10 million from Polychain, Anagram, and others. Big congrats to Zach and the team over there.
Then it's Arc Labs, which is a Bitcoin DeFi platform. There is $5 million from Tether, EgoDeath, and Anchorage Digital.
Cryptio is an institutional crypto accounting platform. There is $45 million from Blackfin Capital, Sentinel Global, 1KX, and Blue Yard.
And lastly, it's Utexo, which is a Bitcoin native stablecoin payments platform. They raised $7.5 million from Tether, Big Brain Holdings, Portal Ventures, and Maven 11.
Tether getting involved there. Vote of confidence, I guess, for Bitcoin. There have been a lot of Bitcoin native stables. No breakout successes so far, I would say.
Yeah, not yet. Tether's deploying a lot of capital. I feel like in the deals of the week, we're saying Tether quite a bit.
So I think we have to acknowledge the elephant in the room, which is, are we entering some kind of prolonged oil crisis, do you think, here?
Well, how long is the Strait of Hormuz going to remain closed, I guess is the question.
I think it can be closed indefinitely. I don't actually think, because we had this issue with the Houthis, was the last year?
Yeah.
Pretty ragtag militia, and they were able to, was it the Red Sea that they were targeting, shipping in the Red Sea? So I think if Iran wants, they can keep the strait shut as long as they want.
I don't know if you can I guess all it takes to disrupt the Strait is one guy kind of with a rocket launcher, right? But
yeah, with a shoulder-launched anti-ship missile, like that's the thing. I think people think you need ships and mines. I don't think so. I think you can launch a missile from inland.
Yeah, I don't know. At some point, though, don't you think China, who's receiving most of that oil, starts to do something about it?
Yeah, I do. And I think one thing people don't realize is the U.S. is the number one producer of oil in the world, or oil plus natural gas. Domestically, the U.S. would actually be fine in some ways. It wouldn't be catastrophic if the Strait stays closed, because we're not really getting the oil from there. But Europe suffers, Japan and Korea and China suffer if it stays closed. And obviously the oil producers in the Gulf suffer. So it's kind of scary territory. Yeah, Scott Bessent has said, this just came out, he said it was always part of the plan for the U.S. Navy to escort tankers.
But are they actually doing that right now?
No. As of right now, no. So,
yeah, they might have to start doing that. You also wonder what that's going to do for interest rates here. So if oil's trading at 110 throughout the summer, it's going to be a tough call on cutting rates, I think.
Yeah, I mean, some people are now thinking the energy shock could tip us into another inflationary episode like the 70s.
Yeah.
I'm actually a bit more optimistic, believe it or not, but I can understand why markets have the jitters right now.
Trading these oil contracts on hyperliquid seems to be what a lot of people in our industry are doing.
Yeah, it is funny. The peak of the crude price was the exact day that oil was listed on Binance.
Is that right? Wow.
Yeah.
That's perfect. That's like every token that ICOs on Binance, just straight down.
It's a classic pattern.
Binance just takes 8% of the supply. Do they just get 8% of all the oil? Is that how that works on that contract?
Something like that.
And they give it to their VIP insiders and just dump it into oblivion. That's the Binance way.
So, yeah, speaking of Binance, they are suing the Wall Street Journal, apparently, for defamation regarding the WSJ's reporting on Binance's compliance failures. Is that right?
Yeah, proving defamation is going to be really hard, don't you think?
Enormously hard. In the US, very, very high bar to meet. And also the defense is the truth. So if the WSJ was reporting accurately, then it doesn't matter that it's damaging, that they're in the clear.
There's a Fortune article this week on Binance and some of the money laundering allegations there. There's a ton of detail. I mean, if there's an explanation to this, then Binance should get out in front of it. But, they have the ages of the people, where they apparently were said to live, what type of ID they uploaded. There's an unbelievable amount of detail on these alleged money laundering violations.
Yeah, I mean, I just wouldn't be surprised if there was substance to the allegations. And I will say, sentiment seems to have turned sharply against Binance. It really doesn't help that the compliance was loose, that they fired, apparently, the compliance officers that found this. And, of course, 1010 does not help.
Yeah. 1010, we still don't have a great explanation of what happened there. But at minimum, we know that Binance, the way they had the index price calculation and feed was wrong. And so they made the situation worse.
Yeah, so they need to get their house in order. Domestically, NASDAQ and Kraken announced a partnership to bring equities fully on-chain via Kraken's X Stocks platform, designed to give holders of tokenized shares the same rights as any other common shareholder.
Thought that was really interesting. Of course, last week we talked about Intercontinental Exchange investing in OKX. This week you have NASDAQ and Kraken. You think it's more of a trend here? The TradFi exchanges coming in, doing partnerships with the crypto venues?
Yeah, I think so. I think, fast forward 10 years, the default brokerage people use will be one of these hybrid crypto traditional platforms, whether it's a Coinbase or a Robinhood or a Kraken. So I think it makes sense just to have stocks natively on those platforms. And I think it makes a lot of sense. I mean, it's just, we obviously have to iron out some of the details, but it seems to be the form factor that people want.
Yeah. Yeah, certainly there's a distribution advantage to going and pairing up with some of these crypto natives if you want to play in the retail game, right? So the interesting thing is a lot of these exchanges, that's not really their business to begin with. They're almost like seat model type of exchanges, a B2B motion, whereas the Krakens, the OKXs of the world are retail brokers, basically. And so it's almost like a vertical integration play for some of the legacy exchanges.
So on the regulatory front, huge amount of news this week. I don't even know where to start. The SEC and the CFTC had an MOU. They're going to formally coordinate oversight of digital assets. Basically, the way I read this was the turf war between, kind of a detente in the turf war between the two agencies.
Yeah, which is good to see. So you had Selig and Atkins went on Chamath's podcast, All In podcast, and talked about this a little bit. I mean, this was part of the tension under Gensler, right? He was sort of always behind the scenes elbowing out the CFTC. And people thought that he was trying to make a turf war battle to take over the CFTC, which of course Gensler ran at one point. So it's good to have that because there are a lot of these cases in our industry where it's unclear whether or not the token is a security or a commodity. And you just need to have, a lot of dialogue, I think, between those two agencies. There's going to be trading venues that have securities and commodities side by side to each other. And you don't want to have duplicative dual registration efforts if you don't have to.
Yeah, one thing that I found particularly interesting was the two agencies are going to collaborate on market surveillance. So with information sharing, joint oversight, coordinated investigations. Meanwhile, you have the CFTC's Division of Market Oversight. They released their guidance on prediction markets, calling on exchanges to engage with the agency prior to listing contracts that might be vulnerable to manipulation. Think about it, the SEC is the main agency that deals with market manipulation, insider trading. It looks like the CFTC's enforcement function is being beefed up here, specifically with an eye to prediction markets.
Yeah, this was a really interesting one on the CFTC side with prediction markets, because as we know, these markets are not doing this right now. Like, do you get the sense that Kalshi and Polymarket are getting actively involved in trying to go through an approval process to list these markets and make sure that they're not ripe for manipulation or insider trading? Like, at least on the Polymarket side, this is just a free-for-all.
Yeah, I mean, I think they have probably some analytic function to investigate, suspicious heavy betting patterns, accounts that are freshly funded and make bets right before the markets settle or before they swing one way. The thing is, these platforms are just going to have to build this capability because either the regulators will demand it or there'll just be dozens of these kind of insider trading events.
Yeah.
So they'll have to get good at this.
You're just going to see a turf war here for the next few years between CFTC and the state attorneys general. I think you're going to see a lot of lawsuits from the state AGs that don't want this in their states.
One market that I think we're going to see insider activity on, or if I had to guess, would be the Oscars. Because, of course, there's people with privileged information, right, as to the winners.
Isn't it KPMG or Deloitte or whoever does they get the names ahead of time? Is that what you're talking about?
Yeah. I mean, so a certain number of people will know, right?
Yeah.
And one of them might be tempted. These are going to be liquid, very liquid markets because there's a lot of interest in them.
When are the Oscars?
Couldn't tell you, but there is a whole feature on Polymarket.
Who's up for Best Picture?
One battle after another is the overwhelming favorite right now, 77%.
I've never heard of it. Have you seen that?
That was the Paul Thomas Anderson movie with Leo. I haven't watched a single one of the candidates. The second favorite with 20% is Sinners, followed by Hamnet. Hamnet was actually pretty good. That's the only one I saw.
I haven't even heard of any of those. I'm very out of the loop on cinema. I haven't been to the movies in like 10 years.
I actually recommend Hamnet. It's about Shakespeare. It's his son. That was his name, Hamnet. But apparently back in those days, the N and the L was the same letter.
Really?
Did you know this?
No, I didn't know that. And
so then he wrote the play Hamlet, and he named it after his son who died. Not to spoil the movie.
Oh, all right.
But it's actually quite good.
All right, I'll have to look at that. Everyone keeps on telling me I need to watch Age of Disclosure. Have you seen that yet?
No.
Alex Thorne was talking about that on his podcast. Go listen to Galaxy Brains this week. They talk about UFOs on Galaxy Brains.
Oh, it's a UFO thing.
It's a UFO thing. Apparently it's good.
So elsewhere, Ripple announced a $750 million buyback. That values the company's equity at $50 billion.
Wow, that's a big number there. Impressive. Next one up is a cross protocol. This is a cross-chain bridging protocol. They launched a governance vote, and they're considering sunsetting the token and the DAO structure in favor of actually becoming a U.S. corporation with more traditional equity ownership. I would think that you might try to see more of these, actually.
Yeah, every time this has happened, I've thought to myself, well, I think there'll be many more. And then there just haven't been. Like, do you remember Iconomy from 2018
Oh,
or
yeah.
something?
That was a big ICO, wasn't it?
They did something like this. I think they were arguably the first ones to try this. And at the time, I thought, well, a lot of these tokens are just going to do that and convert the tokens into equity. Maybe now it'll actually happen. I think maybe now is the right time. But yeah, very interesting. We'll be monitoring this one.
So I kind of struggle with this a little bit because on one hand, you're like, okay, that makes sense. It should just be a security token depending on what the token actually does. This DAO structure clearly doesn't work for a lot of these formats. But then when you dig into some of these that are thinking about going private, quote unquote, the revenue that they generate is not much, right? So you have, let's say you have $1 million a year in transactional volume. What type of multiple would you get on that from a valuation perspective? So I think you'll end up seeing a bunch of these protocols that are worth $20 million market cap, and they think going to equity will increase the value. It's like, no, actually, you probably just bring the value down to like $5 or $7 million for your equity.
Yeah, I agree that almost certainly a multiple compression story. And also logistically, how do you take 20,000 globally distributed token holders, presumably some of them retail, and then give them an ownership interest in a U.S. security?
That's don't.
The hard part.
No, you don't. And I think you kind of have to hope that a lot of people have those coins on wallets that they lost. And I suspect you'll see some shenanigans where the teams will say, okay, if you don't claim the tokens in 90 days, those reverse accrete back to the company.
Yeah, so that's the one thing I've never seen anybody solve elegantly.
It's not solvable, right? Because in a private company, you're capped at how many shareholders you can have. So unless you put together some SPV structure and you can let these people in, but even at that, you're going to have a lot of non-accrediteds, right? So I think the accreditor investor laws actually stand in the way of this really working.
This could be something for the SEC to think about.
They should. I mean, on that podcast, actually, the All In podcast this week, they talked a little bit about the accredited investor protection laws, which really just don't work. I mean, they really keep people that are below a certain income level down. Like, I remember for the longest time when I was kind of getting into this industry, I was well below the accredited threshold in terms of income, and I just thought that was crazy. It's like, I'm pretty qualified to look at some of this stuff.
Yeah, there should be some kind of skills-based qualification as opposed to just means.
Yeah, I don't know, like a test or something, but I guess always a test could get gameable. You don't want to put like a bunch of bureaucracy around and do Series 7 and make people come in. But yeah, there's got to be something.
Not very elegant. The Ethereum Foundation has begun staking a portion of its treasury with Bitwise. Bitwise on-chain solutions, new infrastructure for institutional grade staking, with plans to stake up to 70,000 ETH.
Bitwise is cranking. We're obviously investors there, so big fans of what they're doing. But between the asset management arm and the new staking arm, so they bought a Testint and then Chorus One. So they've become one of the largest staking companies as well. So did you see MicroStrategy bought more Bitcoin this week? So they bought $1.28 billion worth of Bitcoin this week.
And that's based on their perpetual instrument, right?
It seems like that perpetual instrument is what's driving it, yes. They now have 3.5% of the total supply of Bitcoin.
Well, at least someone's buying. The White House released Trump's cyber strategy for America. Does talk about blockchain infrastructure, also mentions post-quantum cryptography as a priority for the admin.
Now, I saw some mixed things on that. So on one hand, people are saying, well, the prior admin actually had more concrete dates around quantum and seemed a little bit more worried about it. Did you read that into it?
Yeah, I've seen this commentary. My view is that the core transition dates from NIST are unchanged. It's still, 2030 is when most agencies are instructed to start deprecating legacy cryptography, and some high risk, high value strategic agencies have to actually basically complete their transition by then. 2035 is the target date for full migration across the whole government. That's unchanged. The level of noise the administration is making about it is maybe a little bit less, but I don't see any real change. One interesting thing to track is DARPA's QBI, Quantum Benchmarking Initiative. This is the most rigorous attempt to kind of figure out when and if a quantum computer will be built, a major one. I expect that they'll have their preliminary results by 2027, 2028. So even if one is not built by those dates, we will have a very good sense of the timelines.
That's very interesting. Well, we'll keep an eye on that. I mean, the funding doesn't seem to be slowing down whatsoever into the quantum space.
No, there have been a bunch of new listings both here and in Europe. And I mean, my view remains that it's, a pretty near-term concern, and it's just an engineering challenge. At this point, Scott Aronson keeps repeating that. So there's some forthcoming research that Project 11 is going to put out that will be extremely precise and very technical, which we'll share when it's ready.
In other news this week, Commissioner Hester Peirce at the SEC put out some remarks that touch on tokenization, actually. So touches on a number of categories, but one of the things she said is that the SEC is working on a narrow innovation exemption to allow the limited trading of some tokenized securities rather than a broader exemption, which was contemplated in the draft recommendations. I think my read here is that she's skeptical that creating new rules are actually required, that the SEC can actually just do a lot of this under existing rules for tokenized securities, which kind of makes sense. She closes it, and we'll put this in our newsletter, so subscribe there if you want to read the full take here. But I think the gist of it is like, hey, we have securities laws, and if these things are securities, they should just kind of fit into the laws, which I get, right? Like if something goes from T+2 to T+1, you don't need to like write a new law. It just happens. It's just better technology.
Yeah, that makes perfect sense.
I think the question here is going to be on some of these no action letters and how broad they're going to be. I don't think that you're going to just get blanket no action relief on categories. I think it always has to kind of be case by case specific.
So one thing we forgot to mention is the BPI, not the Bitcoin Policy Institute, but the Bank Policy Institute. They represent the big banks. They're considering suing the OCC over the bank charters that have been granted to crypto and fintech firms. That includes Circle, Ripple, and Bridge.
This BPI, man. So JP Morgan, one of the biggest backers of the BPI. Shout out JP Morgan. Just awful posture towards this industry as usual. The head of the BPI makes over $3 million a year, and he co-wrote a book with Gary Gensler. So that's all you need to know about him.
Jeez.
Yeah.
Yeah, they're kind of sore losers, the banks. Although what's interesting is at the same time, they're kind of planning for what looks like an inevitable future. You saw Wells Fargo filed a trademark for WFUSD.
I saw that.
It implies maybe they're hedging a little bit here.
Well, if you're a smart bank, I mean, you have to do something, right? The snowball has started here on this industry. You're going to have tokenized securities. Banks are allowed to touch the underlying. Stablecoins exist in the world. They will be a thing. You have startup companies that are growing much, much faster than the money center banks in terms of money movement. So the banks have to do something. I think there's going to be a real dividing line between the banks that innovate on their business model, release stablecoins, get into global FX for stablecoins, do tokenized securities, run ATS venues, run dark pools on tokenization projects, and then those that just don't do anything. I think you will see deposit flight from banks that are just absent from the industry.
You know what's funny is the banks that have been protesting the provision, the yield provision and clarity and so on, that have been trying to stop stables offering interest, they don't have a good explanation for why there has not been meaningful deposit flight given the existence already of yield-bearing stablecoins or of kind of high-yield checking accounts offered by these neobanks or fintechs.
That's the interesting thing, right?
I don't see the harm as of right now.
So that's a very important point. So stablecoins in the yield dynamics exist today. So it's not like the crypto industry is asking for something that hasn't already been passed in Genius and that has been existing in this country for a long time. So if the deposit flight was going to happen, it would have already happened.
Yeah, the discerning customer, whether a CFO of a startup or a ordinary retail individual, they already have access to these high yielding instruments, whether through a money market or a stablecoin. So, but it's clear that there's a section, whole cohort of trillions of dollars that are willing to accept the loss on the yield in exchange for the efficiency of being inside a large banking institution. So it seems fine. As the status quo seems fine.
I guess, if I was to play devil's advocate on that and talk against the position, I would say, look, if everything goes 24/7 in terms of trading, that'll probably end up trading against not a bank dollar, but against a stable coin, because you can't move the bank dollars on the nights and the weekends. And so that's a big chunk of activity, right? Anyone who has a brokerage account or wants to trade 24/7, if you need stable coins in order to actually do a trade on a Saturday, and you can make some money on the stable coin, you're going to hold stable coins. So it's valid.
Yeah, no, I agree. Look at Interactive Brokers turning on stablecoin deposits 24/7. I think that's fascinating.
Yeah, it's more than just like sending them in, right? It's okay, if you want to buy Apple, you have to have a stablecoin to buy it. Like the market itself, I think, will be stablecoin denominated.
The other risk that I think banks do face here is just the general acceleration of deposits and withdrawals. So this was already, you saw this in the 2023 crisis. We saw the fastest rates of bank runs ever in history by a lot with SVB, for instance, 100 billion in withdrawals in a single day, because you have online banking and mobile banking. Now imagine how much faster it will be once banks do embed stablecoins fully. I think that's a kind of a true and salient concern, but it's not the concern that the banks are raising.
And actually, like, what entitles the banks to this net interest income anyway? It's purely a function of the treasury rate. So it's like, hey, we have this monopoly from the federal government that we just need to print money every year based on the interest rate and the spread there. Like, I don't think that should be a monopoly. We're not talking about these fintechs coming out and doing fractional reserve banking. They're not actually trying to compete with your direct business model. They're just trying to use the US dollar.
Yeah, and you talk about people being upset about bailouts for the banks in 2008. This franchise that the banks maintain an iron grip on, they print $250 billion a year on the interest margin. So it's just a never-ending rolling bailout for the banks. So who could possibly be in favor of that aside from the banks?
The banks. And the banks have the most powerful lobby. I was down in New York, as I mentioned yesterday, and was with a group of people that were asking me about the fight here between the industry and the bank lobby and who's going to win. And my take is, look, the bank lobby is pretty powerful. It's way more powerful than the crypto lobby at this point. And they're super entrenched with the senators. So, to the extent that a deal happens here, it's probably going to look a little bit closer to what the banks want than the crypto industry wants. But I don't think that's the right thing.
Yeah, and it was funny because even this compromise of paying yield on stablecoin payments, like some kind of a rewards for payments, like an interchange model, even that is controversial.
It's good to have something to unite against, though, right? As an industry, we had Gensler, we were united. We had FTX, we really didn't like Sam. Now we got the Bank Policy Institute and Jamie Dimon.
Yeah, and I want to give props to Coinbase for holding the line on this on behalf of the whole industry. It's kind of punk rock of Brian Armstrong. He's not the guy that people often call, a cypherpunk or anything, but he's showing a lot of backbone by doing this.
Yeah, I mean, he's in the Davos getting profanities laced at him from Jamie Dimon, right? He's hanging in there for us.
Yeah, good for him, honestly.
When do you think we get one of these Bank Policy Institute like things? You know, we have Fair Shake, we've got the political side of it, but when do we get the trade group that just works behind the scenes covertly, where the head guy makes a lot of money, but he's a secret pawn of Gary Gensler and Elizabeth Warren, but he makes $3 million a year?
Yeah, I think the problem is that we are a very fractious industry and we have a lot of internal divisions.
I think we could get behind like a Jake Chervinsky, some kind of person like that.
Yeah, we're also political outsiders as an industry, so we have to spend big to get anyone to care. So I think it just comes with time.
Time and jobs. We got to create many more jobs, I think. The banks have that. They have armies of human beings. So that's the politicians take that into account,
Yeah.
I think. Speaking of quantum, Kathy Wood's ARK Invest just came out and said quantum computing is a long-term risk for Bitcoin, but not an imminent threat. I guess we'd agree with that.
Yeah, but even if the threat's not imminent, the urgency to act is actually imminent. And I think that's the thing people miss, because it's not an overnight adjustment. So, and it's really a function of, do you want the transition to be rushed, or do you want it to be done fully and in a careful way with a minimal loss of funds? So even if it is 10 years away, you probably want to start very soon, because everybody has to migrate, everyone. So you just want to give people time to do that.
I've always been more of a panic early person myself. You know, you see some COVID cases and you just go and buy a ton of toilet paper. One of those.
Yeah,
type
and
of things.
also, what's the downside? There's not really a downside. You know, there's plenty of cryptographic functions that are secure. We could do hash-based signatures today, so why not give people the opportunity to start migrating? Then that mollifies a lot of the concerns. Wall Street is less worried. You show that you're doing something. I don't see a lot of upside in just denying the risk entirely. Denying it outright, all that means is you're just going to have a rush transition later. That's all that means.
Yeah, might as well just get ready early. All right, I think that is it for the week. Everybody have a safe and healthy weekend, and we will see you on Monday.